This was the headline last night as Netflix kicked off the tech earnings for this quarter. And based on this headline, you'd think, wow, what a blowout earnings. This is good for tech. This is good for the NASDAQ. This is good for the stock market. They beat on EPS and beat on revenue. But things aren't always what they seem. After hours last night, Netflix stock dropped over 10% at one point after settling down near 9% close to around $500 per share. So what's going on with this stock? Is Netflix peaked? Was it just a stay-at-home stock so now people don't care about it anymore? Is the competition like Disney Plus eating their lunch? Oh, and is this a buying opportunity? Guys, I'm going to answer all these questions. We're going to address all of that in this video, so I think you're going to get a lot out of it. So sit back, relax, and I hope you enjoy. So now here's the thing. Making these kind of videos in a timely manner, especially when I try to pump out as much content as possible for you guys, it gets difficult and I can't always get it out as quickly as I want. These videos take hours to create, so you gotta understand that. So if you're someone that wants to hear my perspective, especially when, earnings season comes out or the market's volatile or whatever, the best place to do that is in our Discord chat. And this is part of our VIP group. You can join, link description down below. I'll leave it as a pinned comment as well. And pretty much whenever there's something interesting in the stock market, I post about it, I talk about it with my members, other members ask me questions, and we have a great community going. It's just much easier and quicker to share my thoughts, in a few sentences in text versus creating a full-fledged video. But if you're not able to join for whatever reason, I completely understand, and I will keep trying my best to pump out videos as quickly as possible for the YouTube channel as well. So with Netflix, despite the massive EPS beat that they had this quarter, despite them beating on revenue and growing it by over 24% year over year, the company did miss out on a metric that investors pay very close attention to when it comes to stocks like Netflix. Net new subscribers, this is the metric that you need to keep a close eye on, and Netflix only added about 4 million subscribers this quarter versus a forecast of 6 million. And if you compare this Q1 to the past Q1s that they've had, this is the worst Q1 on record here. And that's bad, but there were two big reasons for this. First is that 2020 was an abnormal year, and because Netflix was such an ideal stock to benefit from it, it pulled forward a ton of demand. Netflix saw massive growth last year, and people who would have subscribed maybe in 2021, 2022, suddenly decided they're gonna subscribe in 2020, and that's why the audience right now is a little bit saturated. The second reason is because the content that they had so far in Q1, nothing great, to be honest, and Netflix knows this because all of their good content, the stuff they're pumping a lot of money into, is slated for the second half of 2021. So that's when they expect, kind of a ramp up once again in subscribers. Now, if the number for Q1 wasn't bad enough, their forecast for Q2 is 1 million new subscribers. And you can see this is expected to be by far the worst growth rate in subscribers in recent years for Netflix. So this has a lot of investors spooked. A lot of people kind of just see the headlines and they make a conclusion, they sell a stock based on that. You get a lot of irrational, emotional selling like we saw after hours. And people just draw conclusions like, hey, I guess Disney is winning out, they're stealing subscribers from Netflix. Well, according to Netflix's report, that isn't exactly true. They don't believe competition was a material factor in this lower than expected sub growth. Now we'll have to wait and see how other streaming services did when they report their earnings and they disclose the numbers for subscribers. But honestly, the general takeaway here, in my opinion, is that Netflix still added 4 million new subscribers, and that is still a good amount of subscribers. So I mean, it's really up for interpretation, right? You can take this either way. You can either believe management and be like, okay, yeah, it was kind of an abnormal quarter, especially coming from last year of all years, and I believe them, yeah, there wasn't really competition risk. Or you could be in the other camp and say they're full of BS, their competition's eating their lunch, Netflix is in trouble. It's kind of early to tell until the others report their numbers as well and report how much growth they saw, but just keep that in the back of your mind if you are considering Netflix stock. But regardless of this, we did have a few tidbits of information from this earnings report which I thought were actually really good and seems to be, suppressed with all of these bad headlines here. One of the biggest bear cases for Netflix over the last few years has been their growing debt and the fact that they will never become free cash flow positive. So they spend billions on their original content, they just keep racking up debt, but they're not making any money to pay off that debt. So it's kind of like a system where they just keep building up more and more and more risk, and investors were getting a little uncomfortable. But with this Q1 report, things are changing. In Q1, Netflix reported net cash generated by operating activities to be $777 million versus $260 million last year, and free cash flow was $692 million versus $162 million last year. This is a monster improvement year over year. Furthermore, they say that they expect free cash flow to be break even for 2021, and they will not need to raise any more debt going forward, as the business will now be able to sustain itself and become a profit machine. In fact, Netflix is so confident here that they approved a $5 billion share buyback, which they may start buying as soon as today. This will significantly add value to anyone holding Netflix shares. And Netflix is pretty comfortable maintaining their debt between the $10 to $15 billion mark. They don't really plan to pay that down. They're okay maintaining and just paying the interest on that because they feel that's probably the best thing to do for their business. And maybe they suspect this year the stock price is going to be a little bit suppressed, so they want to buy back shares, add value back to shareholders, and hey, we'll see over the long term if this was a smart move or not. But what I do notice here is they're kind of flaunting it to the shorts, to the bears, and saying, look at us, we're making so much money now that we can even buy back shares. Free cash flow concerns? Nothing to be worried about anymore. And as I shared with my VIP members, I think that the current valuation for Netflix is actually looking pretty decent. With $30 billion of revenue expected this year in 2021, it would mean a 7.3 price to sales, and this is not accounting for the buybacks that the company will be doing, which makes things even more appealing. Historically, you can see a 7 or so is pretty good value for Netflix, and if investors are willing to pay as high as a 13 plus in 2018 for the price to sales when profits were, miles away, there was no clear path to it, then investors theoretically should be jumping at the opportunity now to get this near a 7 price to sales. So I don't know, guys. I think that the headlines were a bit misleading here. I think Netflix actually had a pretty good quarter. The numbers speak for themselves. And yes, they're coming off probably one of their best growth years ever, but that doesn't mean the company can't keep growing and can't benefit from all the new subscribers that joined, because they surely are doing that with increased revenue per user. So I personally have a very close eye on this one. I'll wait and see how this plays out. Maybe I initiate a position in Netflix, we'll see. And maybe this will also end up being a good winner long term if I do enter. Now, you may recall Disney Plus, I used to talk about this well before it was released, well before the media was all over it and all these other YouTubers decided to talk about it. And if you were following my channel back then, you've done really well on Disney. Now, while people believe that Disney Plus could be eating Netflix's lunch, I personally don't think that's the case, guys. The way I understand this, the way I've seen these services, seen these two businesses kind of branch out and kind of cater to different audiences in a sense, I think there's enough room for both of them to succeed and both of them to be dominant players worldwide. So no, I'm not concerned for either of them to suffer because the other one may be doing well. So if we see a similar drop in Disney because maybe their numbers aren't as strong, probably another buying opportunity. Anyways, guys, that's it from me. Hope you enjoyed this video. Again, if you're interested in joining the Discord VIP group, link in the description down below as well as the pinned comment. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.